Alright, what is up boys and girls, welcome back to another video on liquidity, supply and demand. Today I'm talking about the V-shaped recovery, a strategy that has been doing absolute bits for me, to be honest, over the past 3 or 4 months. Absolutely changed the game with how I'm trading and really pretty incredible stuff, to be honest. Giving me around an 80 or a 90% win rate, which is absolutely incredible. So as always, I appreciate your support. Please do drop a like and subscribe. Stick around to the end so that you can see how the strategy works in full. And I'm basically just been going over a few of the trades that I've been looking at and taking recently and just eyeballing this chart. I can already see like 4 or 5 potential trades here that would have worked. Just by looking at this chart, you can see these V-shapes all over the place. Most of these, to be honest, would have at least gave you a 1-for-1. Really incredible strategy, as I said, that's been changing the game for me, to be fair. And I've noticed last night when I was asleep, there's actually been looking like it on the 1 minute here, potentially 2 trades here that would have worked. So we're going to go and take a look at the strategy. So basically, I'm just going to outline what it is. What you're looking for generally in the markets is, obviously, got your markets going like this, it's going like this. And then you've created some key swing points, haven't you? You've obviously got your liquidity down here, you've got your liquidity up here. And generally what I'm looking for is that V-shape to the downside and then back up is the most high probability 80 to 90% win rate strategy that I've been using. So basically what you're looking for is a little duck down below that liquidity spot, sweeping the liquidity below that previous liquidity there, as you can see. And then what you're looking for is the V-shape back up to the upside with an inverted fair value gap as well. This is the entry model that you're looking for. So say, for example, we're going sideways here. We come down, we sweep liquidity, if I can get my words out. We come back to the upside and then we close back above a fair value gap like this. This would be what we call an inverted fair value gap. This is something that there's a trading mentor called Dodgy, who I've been learning so much from, has been basically patenting recently, or at least showcasing to the world. These inverted fair value gaps back to the upside with the liquidity sweep, they create these really high probability conditions that will very much at the least go up and hit a 1-for-1 on the trade. So my stop loss would be below the inverted fair value gap. It would be a manual stop loss, so I'd only close the trade if it closed back below like this. And I wouldn't have an actual stop loss because obviously you can get these wicks back to the downside, and generally speaking that does sometimes happen. You get a back test, and then you're basically just looking to target some of these areas here, the internal swing high and the high of day. You can target the 1-for-1, and then you get to break even once you hit your 1-for-1, and then you've basically got runners to go up to these levels. Very simple strategy. I hope that explained that pretty well. I'll explain it in every single video, so make sure to check back every day for another update on the strategy. But as we can see here, we've literally got the perfect example of this on gold from 4 hours ago. Unfortunately, I was asleep until 8, so I missed this trade. As you can see, this would have been a banger. Let me just put the replay tool on so you can have a look, and basically I'll show you what I'm talking about. So obviously, if you are on the charts at this point and you're looking for a trade, you can see we've got a very obvious swing point down here that you could come and sweep liquidity from. So just wind this on. You can see the price is coming down towards it. Thinking, okay, this is looking promising. We're coming down towards it. We get the sweep. And then you're looking for your inverted fair value gap. You can see, look at this. You're looking for that V shape and that inverted fair value gap. You can see we've got the fair value gap here. Very nice, obvious fair value gap on the 1 minute. You can see we came down. We swept liquidity and we got that crazy good momentum back to the upside. You see, we swept liquidity here. We got 2 candles and then we started to stall. And then we got that big green candle back to the upside. Really bullish. You would have entered on this, closed back above. Stop loss would have been below this, targeting a 1-for-1. For some reason, recently when I have my thing on there, you can't see the risk to reward. There you go. So we're looking for that 1-to-1. Very simple. Wind this on a bit. We hit the 1-for-1. Absolutely textbook perfect trade there. Really nice momentum back to the upside. So you would have took half your profit off there. Your stop loss would be at break even at this point. And then I'd probably be targeting this wick here as my second take profit, and my final take profit probably up here, just because we're probably not going to retrace all the way back up to the high of day because we started so unbelievably high. So I would have been looking for something like this. I would have been already at break even, so half my position would have already been sold off at this point. So basically a free trade. And then if we wind things on, you can see we hit the second take profit, and then the third take profit, it's kind of whittling to the side. When this tends to happen, I do just tend to close the final run it if we do start to go sideways a lot like this, because usually when you start to go sideways, you will come down and probably hit the low again. So probably after seeing, you've obviously got your first take profit hit here, second take profit here. When we came up so close to this, I would have either trailed my stop loss below the candles, or I would have just, once I saw this chopping around for a while, I probably would have just closed somewhere here for the rest of the position. But you can see absolutely incredible trade, absolutely textbook, worked out to perfection. Really, really nice trade on the charts. And these happen all the time. I know on Friday there was a few good ones. If we take a look here, let's have a look on the chart. I thought this was quite a good one. I think this was the one. Very, very obvious sweep of liquidity there. Very, very obvious V-shape back to the upside. You can see you could have took this first fair value gap as the inverse here. Basically entered, stop loss below. As you can see, we did come down and tap this area, which is why I have a manual stop loss, not an actual stop loss, because obviously we came down back into this area, but you can see the reaction to the fair value gap, and the momentum to the upside was really good. You obviously would have come up, you hit your 1 for 1 in the space of about 10 minutes there. And then I would have had my second take profit here, and probably my third take profit either here or here, depending on how bullish I was thinking. And you can see this would have worked out. First take profit here, go to break even, second take profit, and then eventually the third take profit would have got hit as well. So absolutely incredible strategy. Definitely been changing the game for me. This is just on gold as well, but you can do this on more than just gold. You can do this on basically any pair. Although gold and US 100 have been doing the best for me recently. Pretty crazy gap, by the way, over the weekend because of obviously the situation with the US and Iran. We've seen that was a pretty incredible gap to the downside, I have to say. Look at this big beast of a gap. Obviously, this was always going to come up and get filled, and we did fill that previous gap as well with that movement. So all the gaps getting filled right now. Not really anything on US 100 because it's so bullish right now. But if we did come down and get something like this, and then take liquidity and then come back up, that would be the trade that I would be looking for today. If we got really bearish, we could come down to here and get a nice V shape. It all depends what happens on open, because obviously open later on, it's going to be pretty spicy. So we'll have to wait and see what happens with that. But right now, I'm just waiting and seeing what will happen next in the markets today for gold and US 100. Absolutely incredible strategy. Really, really appreciate you all getting involved with the channel. If you do want to get signals or alerts for these kinds of trades, you can join my Discord down below, where I'll be alerting these trades whenever I see them throughout the day. I'm awake during London and New York sessions, so I'll be alerting during those times. I really do appreciate all the support on the channel. Please do like and subscribe and leave a comment. Check out the next video on screen, which will be detailing more about how I break down the strategy, and I will catch you in the next video, guys. Thank you very much for watching.